I was looking at the market yesterday, down 0.1%. And I was looking for the rest of the year. That market is down 19%, 20%, thereabouts. And I'm correlating that to economic growth of 7% plus. And that's expected to continue into 2012. I'm scratching my head and I'm saying there is here a disconnect between very good economic growth, very strong in the circumstances, and underperformance by a market down 20%. Why is that? It doesn't make sense to me.
Well, you're pretty much right, Godfrey, and it's something that I guess for us down here, analysts, we're pretty much aware of. And that's the reason why I keep saying that a good number of the stocks on the market are underpriced, they're underperforming. But in the course of the year, we have seen the reasons why this has happened. Majority of the shares were owned by or held by foreign investment portfolios. And when the crisis in other markets started, there was a need to exit this market. Fundamentally, what we need to do to get the market to start reflecting the indices or the performance of the economy is to have a lot more domestic funds in the market. And not short-term domestic funds here, but actually long-term funds that provide the kind of stability and confidence which the economy itself shows.
Yeah, two questions for you then. Why do we have fewer domestic funds focusing on the market? And secondly, why has been Nigeria sold so aggressively compared to what we've seen here in South Africa, where the market here is almost flat on the year?
Well, first of all, the aspect of domestic funds, I think locally here, we still need to find people who have that much confidence in being able to put funds into the market. But you've also got to realize that you have an alternative market in the money market. And this is a play on interest rates, really. And that's why capital market analysts keep saying that there is a need to be mindful of what kind of rates come up in the money market. Because investors locally will simply shift their funds into the money market where they can get fixed income, higher returns with greater certainty, and in institutions that more or less guarantee that return. So that happens in that way. As to your other question in terms of expecting that the market may perhaps have ended flat, I guess it's a bit too late in the year to expect a recovery of any sort. And there are quite a lot of companies that are coming around to their year end for December 31st. So you'll probably find people wanting to hold on to positions as much as they can. Wherever trades occur, there may just be shifts in terms of positions. I think the year is done. It's probably a 20% loss year to date. If anything, it gets slightly better. But we will just have to take it from next year and hope that the stimulants in the economy start to reflect.
Indeed, so 2011 will turn out to be quite a sorry year for equity investors in Nigeria. But yesterday, if you can just look at those numbers, the food and beverages sector down 1.4%, and then the oil and gas sector down 1.4%. But you see sticking to the food and beverages sector, particularly when I look at your stock picks. I am seeing PZ Industries, I'm seeing Just Breweries, I'm seeing Nigerian Breweries, GlaxoSmithKline.
Well, there's something about food and beverages. More in terms of their operations, you find, and I always say this about those companies, I expect some push-up in terms of inflation early next year. If the petroleum subsidy is removed and we have an increase in pump prices, you'll have that multiplier effect in the entire economy. Prices are going to go up. For fast-moving consumer goods, the play is simply to add on the costs onto their prices. And these are often goods which consumers are going to buy anyway. So you're going to find a ramp-up in terms of turnover, in terms of even if sales drop, the turnover will actually still increase. And so those are sectors and those are companies where more or less performance tends to be able to meet whatever happens in the economy. They're always able to take advantage of that.
Yeah. Ade, I've got a minute, and I need you in that minute to be able to tell me, you speak in the notes that we exchanged in the morning about the immense potential for the Nigerian market going into 2012. From where we stand, what percentage gain do you see?
Well, there is definitely a lot of potential. Nigeria has never lacked that potential. It's all a matter of how much we're able to actualize this. I have been looking at the budget. I think, yes, the short-term shocks we're going to get in the first 30, 60 days of the year will be there. But once we do settle down, once we start seeing infrastructure build, once we start seeing the right kind of transactions, giving companies a lot more confidence in terms of their operations, once people start to get a lot more comfortable with governance and its institutions, I see the kind of stability that would allow growth to happen by this time next year.